T-bills market remains bearish as investors prefer on-the-run bonds, especially the 2035 and 2053 papers. Trading is expected to remain muted as banks provide funding for Monday's bond auction settlement. Adamma Mbachu, team lead currency trading at Access Bank, joins us now for more on the markets in Nigeria. Thank you so much for your time today. Let's start by just getting an update on that bond auction and what has followed after the Monday auction in terms of trends. And certainly I want to get to what we're seeing with the yield curve. I think it's important to explain what's going on there. But first of all, how's the market traded since that bond auction?
Thank you so much for having me. Yes, there was a bond auction on Wednesday, on Monday, where the DMO sold a total of 360 billion across the standard maturities. And the auction result came out at levels quite expected. For the 2029 came out at 12.5, 2033 came out at 13.2, and we have the 2042, it came out at 14.1, and the 2053 came out at 14.3 levels. And so after that, we saw that the secondary market didn't really move. The market traded at those levels at the auction. We expected the market to dip a bit because we had people that took positions with the interest to sell at the secondary market if there are opportunities. But however, we see that we are not seeing much on the bid side, and the market is at levels at the auction.
Right.
So after that, we saw also the funding of the auction is actually today, and we saw the market a bit bearish. We saw that the market that was positive closed and opened with about 583 billion, will probably close with a short position of about 100 billion, giving the funding auction of about 600 billion that will hit the system today. However, we still expect some coupon payment for some bond maturities coming in today, about 65 billion, and we expect another 90 billion coming in on Friday. So we see a bit of liquidity in the market that will actually maintain the rate at the current levels. The money market rate traded at probably 2.14% to 3.14%, given the funding auction, but we expect the rate to be a bit stable given the injections in the market.
All right, so let's talk a bit about the yield curve, because if you take a look at it, the short end, we're seeing yields closer to 3% for the 1 month, 3 month paper and thereabout. But then as we move over to the 3-year, 5-year, 7-year, we begin to see double-digit yields. And I just wanted to understand the dynamics that are at play at the short end of the market and at the long end of the market. I imagine that there is something around the investor participation that perhaps can explain this.
So the yield movement is basically as a result of the interest in the market, the demand and supply, and also it has to do with the duration and maturity of those instruments. So for the shorter instrument, we expect a lower yield, while going to the longer end, because of duration and risk, we expect a high return on those maturities. That's actually what explains the yield curve. However, activities in the market can actually affect the yield curve to tilt a bit different from what it used to be, but the movement will not really change. So we saw more interest in the longer end of the curve, where people expect to get more returns rather than going down to the shorter end of the curve, and that is where you have seen variations so far in the market.
Okay, so let's talk a bit about the Forex market. Just analyze for us activities in that market. I think there's been a lot more interest since the harmonization of of rates. But then, of course, if we now begin to take a look at the parallel market rates, we're seeing those now begin to move way above 800 naira per dollar. So can you just explain what has been going on in the I&E window over the course of this week?
Yes, the I&E window has actually been has been on a depreciating trend, where we see that the naira is fast losing value, and given the liberalization of the FX market, as participants in the market actually ask for more value on the naira, given the uncertainties around the Nigerian economic and FX market space. So we see the market trading around 792 levels all the way to 842 levels. So we have seen also the CBN managing float from their own end by their various interventions. But however, the supply in the market by the central bank has not been strong enough to sustain the market. The market is fast depreciating, and we see the Naira losing a lot of value.
But are there any seasonal trends? For example, in the summer season, is there anything that could reflect either the extent of supply we're seeing to the market or the quantum of demand that we're seeing right now?
So, for over time, prior to the liberalization, the market has actually been short in the sense that the demand has always outweighed the supply. So there have always been a backlog of unsettled demand in the market, and which has put a lot of pressure on the Naira. So with the synchronization of both markets, liberalization of the market, we expected to see more flows into the market. However, we have not seen that to be able to douse the pressure in the market, but we have not seen that yet. And so we have seen the Naira consistently under pressure at almost 842 levels.
Right. Thank you so much for your update today. I've been speaking to Adamma Mbachu, Team Lead Currency Trading at Access Bank.